Hi, welcome to the Market Alert for Wednesday, May the 6th, 2020. So, the Fed's Clarida spoils today's economy, ignoring the surge in stocks by announcing we're in a global recession. I would substitute recession with depression because that's what it's going to be, a global depression, not a recession. So yesterday in the intraday pre-market for the Dow, everything was going swimmingly. The market moved up 150 points until there was an announcement by the German courts about the ECB's behaviour, saying that the printing of 1 trillion euros is unconstitutional. And they were voted down 7-1 on this, which sent the market to the downside. So basically what happened here is, it says here, the top German court finds some ECB actions unconstitutional, gives a 3-month ultimatum to fix QE. And as it says here, the Bundesbank may thus no longer participate in the implementation and execution of the ECB decisions at issue, that's the bonds, unless the ECB Governing Council adopts a new decision that demonstrates the PSPP, that's the shortened version of the name for the program that they want, and are not disproportionate to the economic and fiscal policy effects. So they've had a bit of a slap on the wrist at the ECB, having printed 3 trillion in QE already, where it's not been effective. The German courts are saying, look, you're going to have to prove that printing another trillion is going to make a difference, and anybody that watches the Market Alert knows this is not the case at all. It won't make any difference whatsoever. However, the market did find support at the 200 MA, went straight down to it and then went straight back up, and we went into the afternoon session, which you can see here, with the market just moving all the way to the upside till it puts in a double top here and then starts to pull back. We've got a 76% retracement here, another double top here, and then Clarida makes her comments and the market falls out of bed right back to where we were earlier on in the morning, when we saw the German courts rule against the ECB. However, overnight, do not despair, the market's had a bit of a shakeout and has now moved up massively, 100, 200 points, 250 points to the high already. So the market is once again finding its way back to the upside, which we can see in the daily chart, bouncing off the 20-bar moving average and currently above the 5-bar moving average there. So yet again, the markets defy the news and also gravity and continue to move to the upside there. So the 62% retracement at 24,300 is the first upside target, and of course along with yesterday's high that will be needed to be removed in order to move higher, which we can see there at 24,169. It's interesting because obviously the Fed want to print another 3 trillion. They've already printed over 3 trillion, so that's 6 trillion. At the moment, 3 trillion, you could say, has basically created a 62% retracement in stocks. And it's staggering when you actually start to look at it this way. I know all the money hasn't gone into the stock market, but again, supporting the economy, if you think that the first 3 trillion and the market's only managed a 62% retracement in stock prices, another 3 trillion, to try and get the markets back to what was already an inflated high and asset bubble. It just goes to show that really the financial methadone really isn't working, and that we could see going into the summer a retest of these lows, that's for sure. And also the old adage, as we spoke about the other day, sell in May and go away, but it's certainly looking weak at the moment. Any sort of moves to the upside, I don't know what would move it to the upside. It's really starting to struggle. There'll be the odd day as the lockdown is eased, but otherwise the market really doesn't have any good news going forward, as the economic data will only get worse. That's it if it's allowed to. Eventually they'll have to pull the plug on it, and it will have to find its own fair value, which will be an interesting one, because that's probably going to be around about the 6,000 level. On the weekly chart, so we can see prices closing above the 200 MA there and back above the 50% retracement for the weekly chart there. Meanwhile, the implied volatility is again in a bit of a sideways move at the moment, as the market is also sideways, so nothing new there to report. And as I've said before, this is what's likely happened. The creator of the Bond Volatility Index reveals when the Fed will finally lose control. And I think for me, they've already lost control. As it says here, the Fed will no longer be able to hold back the tides if interest rates above 4.5%. Well, that's not going to happen for a while, unless they're talking about the 30-year bond, which is currently below 1%, I think, as I record this anyway. But yeah, absolutely. I mean, the Fed have already lost control, in my opinion. It's just a matter of treading water until the reality kicks on that they can no longer do this. So there we go. Let's just have a quick look, see if we've got any economic news today. We've got the EU economic forecast. That's out at 10:03. That's very precise, isn't it? And then we've got the ADP non-farm employment change. This will be an interesting one at 1:15. And then tomorrow we've got the claimant count as well. So keep an eye on these. Minus 2.5. I think it's 2 million there as far as that figure is concerned. So yeah, let's see what happens. Okay, as ever, thanks for watching. See you in the next one.